Hi everyone, good afternoon and welcome to our webinar today. As you might know, if you're new here, welcome. If you've been here before and seen us speak before, welcome back. So basically today in the market, you may have known that most of our tech companies have increased about 1 to 4 to 5%. As you can see, UWC mother share was also up about 5%, but the mother share usually trades around 3 ringgit plus. But what if I tell you that you can gain exposure to UWC with a much lower capital via warrants? So without further ado, that's where our webinar today will be covering about warrants and the features and what you need to know and what you need to learn before trading these warrants. And we have our speaker today, Tucker, that will be going through with us and share with you all the features and what to look at and how you can gain exposure to these underlyings. So without further ado, Tucker, the floor to you.
All right, thank you very much, Amy, for the humble introduction. If I may, I will share my screen right now. I hope all of you can see my screen. If you can't, you may let me know in the chat. All right, so I'll give it a couple of seconds for everyone to load their Zoom screen. Okay, so I think we're all set, we're all ready. So let's begin. So once again, good afternoon to everyone. Thank you for joining our educational webinar held by Maybank IB. So in this webinar, I'll touch on the basics of structured warrants. And for those of you tuning in today, if you're new to structured warrants, this is the exact webinar for you to learn more about structured warrants before you start trading, okay? So before I begin the basics of structured warrants, I would like to point out that trading is a continuous loop. The path of trading structured warrants will always begin at the same starting point, and hopefully if all goes to plan, it will end at a net gain each time. You must be wondering then, what is the path to trading structured warrants? So let me show you the 5 checkpoints in your path to trading structured warrants. So as you can see, this is the path to trading structured warrants, and I'll be tying it all up and explaining each checkpoint towards the end of this webinar, so stay tuned. Before I traverse deeper to this webinar, the 3 main parts I'd like to break down for you in understanding structured warrants before you begin to embark are: what are structured warrants, why structured warrants, and last but not least, what is time value and time decay. Let's begin exploring the basics of structured warrants. So off the top of your head, you must be wondering, what are structured warrants and what does it do? I believe some of you here today in the webinar might have heard of it before, or perhaps have curiosity over trading structured warrants, but don't know where to begin. Fret not, in this session, I'll explain the basics of structured warrants and things you need to know and learn in embarking in the path of trading structured warrants. So what are structured warrants? What does it do? How does it work? All right, let me give you the lowdown. To begin, structured warrant is a leveraged financial instrument that gets its value from the value of the underlying security. Why is it leveraged? Because with the same capital outlay, a structured warrant allows you to increase the exposure to the underlying security and offer a higher percentage return, thus magnifying the potential returns that you can have. The ability of structured warrant is that it allows you to multiply the power of your capital, okay? This is the key advantage that structured warrants offer over other types of financial instruments that is available. And it is why often used by investors who don't have large amounts of capital to invest. Secondly, investors must have enough money in their account to cover the total cost of buying shares before they can take a position. Whereas structured warrants cost only a fraction of the underlying securities price. This provides you an avenue to gain exposure to shares that you otherwise couldn't have bought with the same amount of capital. Underlying security will cost a lot even to buy a single lot, but with structured warrants, you can gain exposure and potentially more returns at a cheaper price. Lastly, structured warrants are listed and traded on Bursa, which provides ease and transparency to you. You can easily buy or sell as long as you have a trading account open, and you can easily see the bid offer in the market. To tie it all up, leverage allows you to do more with less. And with structured warrant available to you in the market, it is the exact financial instrument to do so. Okay. Moving on. Now that we know what are structured warrants, I would like to address the two types of warrants available in the market out there. It is best that I clear this upfront before I go deeper into this webinar. The key difference between the two types are namely structured warrants and company warrants. Firstly, let's begin with the issuer. Structured warrants are issued by third-party financial institutions such as us, Maybank IB, whereas for company warrants, those warrants are issued by the company of the underlying share itself. Secondly, there's call or put warrants available in the market. Structured warrants can be issued as either call and put warrants over an underlying share, index, or even exchange traded fund ETF, whereas a company issued call warrant are issued only as part of a corporate fundraising exercise. So company warrants are issued to raise capital and encourage investors to buy stock in their company in the future. Thirdly, when trading or investing in warrants, the question begs whether is it cash or physical settlement. For structured warrants, holders of the warrant is due for cash settlement if it expires in the money and it won't be converted to the underlying share. However, for company warrants, if it is exercised, the warrant will be physically settled when new shares are issued and delivered to the investor's account. Okay. It is very important to know that there are actually two styles of options which include structured warrants, and the key difference lies in when it can be exercised. So for structured warrants, it is European style, whereby settlement is at maturity. However, for company warrants, it is American style, okay? And it will be exercisable at any time within the period until the expiry date. So the two different styles that we have are European style and American style. For structured warrants, remember that it is European style, okay? And lastly, liquidity. Structured warrants issued by third-party financial institutions have a designated market maker as liquidity providers to allow investors to enter or exit the trade easily. Maybank IB is the market maker for Maybank issued warrants, and all prices are transparent. Investors can visit Maybank Warrants website at warrants.maybanktoyou.com.my to view our live matrix to see the indicated movement of structured warrants price at every level of the underlying price. As for company warrants, liquidity depends on natural supply demand of the market at any given point of time. Okay. So for this webinar, I would like to highlight that whenever I say warrants, I'm referring to structured warrants. Now that we've cleared the difference between structured warrants and company warrants, as well as what exactly are structured warrants, then how do call and put warrants actually work? Do you call someone? Do you put something down? As mentioned earlier, the two types of structured warrants available to you as a financial instrument in the market are call warrant and put warrant. For call warrant, the way I remember is call to buy, because call warrant value goes up when the underlying share price goes up. The both move in tandem with each other, and call warrant essentially gives the holder of the warrant the right to buy the share at the exercise price, or also known as strike price. A way to look at it is that you want to lock in a cheaper price to buy the share when it has increased a lot. We all like a good bargain, right? And cash settlement happens only when the share price at maturity is higher than the exercise price or strike price. So for call warrant, it is suitable for investors with a bullish view over the underlying that they are currently looking at. Whereas for put warrant, I remember it as put to sell, because put warrant values goes up only when the underlying share price goes down. The both move inversely with each other, and put warrant gives the holder the right to sell the share at exercise price. So imagine whenever you want to sell something, you want to sell it at a higher price, correct? So in this case, put warrant allows you to sell it at a higher price than the market. And for put warrant, it is also cash settled only when the share price at maturity is lower. Okay, so for put warrant is that if it's only lower than the exercise price. So for put warrant, it is suitable for investors with a bearish view. So remember, both call and put warrants are traded on Bursa, and they are both European style, where it's only cash settled at maturity only if it's in the money. Okay, so those 3 pointers that I like to emphasize on. So we have reached the first pit stop, and just allow me to clear the air over these 2 questions. So you may have wondered, if you can convert structured warrants into the underlying share. The short answer is no. As we've explored earlier, structured warrants are European style, whereby settlement is at maturity, and it's only due for cash settlement if it expires in the money, and it won't be converted to the underlying share. And the number 2 FAQ that we have is, what is a market maker? Or perhaps, who is the market maker? A market maker actually provides liquidity to structured warrants by posting quotes at both the bid and the ask with adequate size and at a minimal spread. Market makers are usually the structured warrants issuer or a party appointed by the issuer to provide liquidity to the market. So this liquidity provider creates market depth. Okay, what you should know in short is that Maybank Investment Bank is a market maker and liquidity provider for the warrants that we issue. So if anyone would like to suggest a warrant to us as the market maker for new issuance in the future, you may do so on the warrants website, specifically on the Structure Your Warrants page. Okay, so just a highlight again, the website is warrants.maybanktoyou.com.my. Okay. So getting back to the next part is that the key terminologies that are important to note when you're trading structured warrant. So firstly, I would like to begin with exercise ratio. So exercise ratio is the fixed amount of warrants required to exchange for 1 unit of the underlying asset. A higher ratio indicates that per unit cost of purchasing the warrants is lower, making the warrant more accessible from a price point and capital outlay perspectives. Secondly, premium determines how much extra that a warrant holder has paid relative to purchasing the underlying asset directly in exchange for the benefits of the warrant. In other words, it is also an indicator of the amount the underlying asset price has to appreciate in order for the warrant holder to achieve break-even. The break-even price for Maybank IB issued structured warrants can be easily found on our website under the Warrant Terms tab. It shows you the current break-even price as well as premium in percent. The lower the break-even price, the cheaper it is for investors to gain leverage over the share. Okay, and next up, we have gearing and effective gearing. So gearing is actually a multiplying factor which symbolizes the amount of capital otherwise required for the warrant holder to gain the same exposure to the underlying asset. And effective gearing basically means the percentage change in the price of a structured warrant corresponding to a 1% change in the underlying asset price. So effective gearing is computed through taking gearing multiplied by delta. So for all terminologies related to structured warrants or investment, it is available on our website at the glossary section and even as a pop-up on the Warrant Tools page. Okay, whenever you hover through effective gearing, there's actually a pop-up that shows you the definition of effective gearing and how does it actually work in short. Okay, so moving on to the next 3 key terminologies to understand is delta. So delta is a term used to quantify the percentage move of the warrant price relative to its underlying asset price movements. Also, it is utilized as an indicator of the likelihood for the warrant to mature in the money, with 100% being almost certain and 0% being not probable for a call warrant. Whereas for the put warrant, it is the opposite, where negative 100% is almost certain and 0% is not probable. So understanding delta is especially useful in understanding effective gearing and sensitivity. So sensitivity, so that's what I'm going to go to next. So sensitivity of a structured warrant is a measure of how much does the underlying asset price need to move in order for the warrant price to move correspondingly. So here you can see the live matrix that is available on the Warrants website for Hibiscus C28 call warrant. Remember, for call warrant, the price of the warrant goes up only when the share price goes up. Here you can see that from 1 ringgit 47 to 1 ringgit 48, it takes one tick for the bid to move from 17.5 cents to 18 cents. Subsequently, the bid to move from 18 cents to 18.5 cents takes 2 ticks in the underlying, which is 1 ringgit 49 and 1 ringgit 50. Okay. And lastly, we have implied volatility. So implied volatility is one of the most important ingredients in determining the value of structured warrants. It is essentially the market perception or anticipation of the volatility of an underlying asset, which is boiled down to numbers expressed in percentage terms. This is especially useful when making comparisons on the relative expensiveness of multiple structured warrants. Okay, so now that we've known the key terminologies, why not, I let you know why trade structured warrants, or, to give you reasons to trade structured warrants. So the question you might have in your head is, why trade structured warrants? So to begin, structured warrant is a leveraged financial instrument that gets its value from the value of the underlying security, which is something that I've highlighted from the start. So why is it leveraged? Because with the same capital outlay, a structured warrant allows you to increase the exposure to the underlying security and offer a higher percentage of return, thus magnifying the potential returns. So gearing is the ratio, like I've mentioned just now, of the share price to the warrant price when it represents the leverage that the warrant offers. So the warrant's value is directly proportional to its gearing. So in this sense, in a nutshell, gearing increases as warrant price decreases and vice versa. It is important to note that it is a double-edged sword. Return and losses can be magnified due to this. Secondly, structured warrants cost a fraction of the underlying securities price. This provides you an avenue to gain exposure to shares that you otherwise couldn't have bought with the same capital. So underlying security will cost a lot, right? Like I've said earlier. And for those who are constrained by capital, you may consider structured warrants as a financial instrument and a trading tool for you to gain exposure to shares that are too expensive to even buy a single lot. So with structured warrants, you can gain exposure and potentially more returns at a cheaper price. So with that, exercise ratio actually breaks the structured warrants into smaller pieces in order for it to have such a low price, okay? And the next one is limited potential losses. So the contrast between warrants and other forms of leverage is that risk is only restricted to the initial payment. This means that exposure can be increased while limiting your capital at risk. Hence, there's no margin call. The losses when you trade structured warrants are only limited to the cost of purchasing the warrants. All right. And next up, another reason that you should trade structured warrants is it acts as a share replacement strategy. Structured warrants allow investors to release most of its capital with exposure to the underlying and replace it with structured warrants to maintain exposure. This allows investors to utilize the released capital to seek for other opportunities elsewhere in the market. To reiterate, structured warrants require a lower capital outlay as compared to purchasing underlying shares. Investors have to pay only a fraction to gain the same total exposure to the underlying. Structured warrants are also listed and traded on Bursa, like I've mentioned before. So this provides ease and transparency to you, where you can easily buy, sell, as long as you have a trading account open, and you can easily see the bid and offer in the market. As a market maker, we continuously provide liquidity through bid and ask quotes throughout the day. This allows investors to enter and to exit a position from the structured warrants regardless of having market demand or supply. And lastly, I would like to point out that, Since we know call warrant value goes up when the share price goes up, while put warrant value goes up when the share price goes down. So up or down, it is important that you got the right warrant that expresses your bullishness or bearishness. Both of this combination allows you to profit from either direction. So it makes structured warrant an awesome and cool financial tool to have during a volatile market like right now. Okay. Now, after going through all that, you must be wondering, should you buy the underlying share or structured warrants? So I have to emphasize that structured warrants are financial instruments designed to be traded and not to be held. Structured warrants provides investor a synthetic exposure to the underlying. However, it's important to note that it does not have any properties of the underlying shares, such as receiving dividend, voting rights, and etc. Given that also structured warrants have a maturity of an average 11 months from issuance, structured warrants are not meant for long-term investment holding. Investors must be aware of their own investment horizon, goal, and conduct their own research before purchasing anything. As for the second one, how much should I put in investing in a structured warrant? And for this, it is very subjective because there will always be suitable trading strategies for different conditions depending on your risk appetite. If the investors have higher risk appetite, they may risk more capital in investing in a warrant. Do note that structured warrants are cash settled and cannot be converted into shares. Risk only what you are comfortable with and what you can afford to lose. There is no clear-cut answer or amount, as each investors have different risk appetite. Like I've mentioned just now, structured warrants have a maturity of an average 11 months. Do note that structured warrants have a maturity date, which means there's an element of time decay that you have to be aware of. And what does that mean? We'll get into that in the following few slides. So before I get into time value and time decay, another important characteristic of structured warrants is moneyness. What it describes is the intrinsic value of a structured warrant in its current state, with all other things being equal. The key elements in determining the moneyness of a structured warrant are its exercise price and the price of the underlying. So for this, let's assume that the underlying that you're currently looking at is currently trading at 3 ringgit and 30 cents. And there are multiple warrants available out there in the market with different exercise prices. The first characteristic of moneyness I'd like to explain is out of the money. And out of the money structured warrants is when an investor purchases a call warrant with an exercise price above the underlying price, which is currently trading at the market. Whereas for a put warrant, it is the inverse, where the exercise price is lower than the current underlying price. Out of the money structured warrants does not have any intrinsic value and only time value. The second characteristic of moneyness is at the money. At the money structured warrants for both call and put have close to zero intrinsic value. This is when the exercise price for call and put warrant is the same as the underlying price. Having said that, this does not mean that at the money structured warrants don't have any value, because it will still have time value. One thing to note is that at the money structured warrants, when exercised at maturity, would not result in any profit. And lastly, there is in the money. In the money structured warrants is when an investor purchases a call warrant that has an exercise price below the current underlying price. And for put warrant, it is when the exercise price is higher than the underlying price that is being traded at in the market. In the money structured warrants have both intrinsic and time value. In short, call warrants is in the money when the strike is below the current market price, while put warrants is in the money when the exercise price or strike is higher than the market price. And you may be asking, so how do you calculate intrinsic value? And in this slide, I would explain to you. So as mentioned in the previous slide, the two elements that dictates moneyness are exercise price and underlying share price. And thus, this means the intrinsic value an investor would pay. And in this slide, let's assume that we want to purchase a call warrant with a warrant price of 50 cents. A quick recap is that when exercise price is lower than the share price, the call warrant's intrinsic value is higher and vice versa. Since the example above assumes the warrant price is 50 cents with the current share price at 3 ringgit 30 cents, while exercise price is 3 ringgit, the intrinsic value of 30 cents is taking the difference between the share price and the exercise price. Intrinsic value is a direct calculation by simply subtracting the current market price from the strike price, while the remaining 20 cents is the warrant's time value. And time value can be calculated by subtracting the intrinsic value from the warrant price. And in this case, it is 50 cents, subtracting with 30 cents, and you end up with 20 cents. So time value is also known as the premium. It is the amount an investor would pay for time. So longer dated structured warrants have more time value as it possesses a greater amount of time to expiry. So let's continue to take the example from the slide. So therefore, when the current share price is higher than exercise price, the call warrant has intrinsic value and is in the money. So for this example, the warrant price is actually in the money. And remember, intrinsic value increases when a structured warrant gets deeper in the money. And moving on, now, I've explained about time value. So what about time decay? With an expiry date and the passage of time, there is something very important to remember is that structured warrants have time decay. Investors buying structured warrants must be aware that warrants will reduce in value over time as the structured warrants reaches its expiration date. Let's see how the concept of time decay plays out in the following illustrations. So let's just take two assumptions, okay? The two assumptions that we are making is that the call warrant is in the money and held to maturity, and the underlying share price and all other parameters are unchanged. Let's pick off from the earlier slide and take that call warrant is a newly issued warrant with the exercise price of 3 ringgit 30 cents and underlying share price is 3 ringgit. So quickly is that the warrant price is 50 cents, which gives the call warrant an intrinsic value of 30 cents and time value of 20 cents, direct and straightforward. So now let's fast forward and you have held on to it for another 3 months, let's say. And after 3 months, due to time decay, the warrant price is currently at 40 cents. This still gives the call warrant an intrinsic value of 30 cents, since we are assuming that the underlying share price and other parameters are unchanged, while exercise price is fixed from the start. But the time value has decayed by 10 cents, leaving you with a time value of the remainder 10 cents. And at last, so what happens if you hold to maturity? At maturity of the structured warrant, time value has decayed fully, and what value you are left with is the intrinsic value, which is equivalent to the warrant price of 30 cents. To sum it all up, structured warrant loses its value as the expiration date nears. Hence, time decay is a negative number. And as the expiration date nears, time decay is likely to increase because the time left to earn a profit from the structured warrants decrease. And on equal terms, no matter how much a share moves, the structured warrants time value premium loses a little each day because of time decay, or also known as theta. Theta is expressed as a negative number, as mentioned, and can be thought of as the amount by which a structured warrant's value declines every day up to maturity. Therefore, it is key to remember that structured warrant is a trading tool, so trade it and don't hold it. And you wouldn't want your donut being eaten little by little daily, just like time decay on structured warrants. So to visualize time decay better for all of us to understand, let me just show a chart with you. and you have time value vertically and time to maturity horizontally from 9 to 0 months. Now let's watch how time decay behaves through the passage of time. So you can see that time decay is not linear and not constant. It tends to accelerate closer to maturity, and this means that the amount of time value disappearing from the warrant's price is greater with each passing day. It is important to exercise caution as well when you're selecting a warrant that is short-dated or close to maturity, and those type of warrants may not be suitable for investors with longer investment horizon. However, it may be acceptable for investors with higher risk appetite, seeking for short-term trades, using the generally higher gearing effect to their advantage. Investors may have tracked the share moving in the right direction, but the structured warrants lost money anyway. This is due to structured warrants profitability decreasing as time goes on. And the reason for that, like I've emphasized, is time decay. And the reason is time, right? So think of it like a tax you pay daily when you're holding onto a structured warrant. And if you hold it for a long period of time, the bigger this tax gets every day and surge as it approaches expiry date. So time decay, or also known as theta, represents the risk of time and the loss of value of the structured warrant. Therefore, newly issued warrants have a time decay that are slower because time is on your side and for the warrant to get in the money, okay? So you might be wondering by now, when and how do you get your cash settlement, and should you even hold the structured warrants until expiry? Do note that structured warrants are cash settled and cannot be converted into shares. Cash settlement is only entitled to structured warrants that mature in the money, and therefore, if the structured warrants you've bought goes out of the money, it is best that you've already decided what to do with it instead of holding on to maturity and losing time value. Cash settlement will be made to your bank account registered with your broker, and payment will be made within 7 business days after expiry date. For those without bank account details, we will issue a check and mail it to the address registered with your broker, which may take approximately 2 to 3 weeks to arrive. And also, to address the second question, structured warrants is a trading tool and hence should be treated as a short-term instrument in your decision making. You may lose significant time value if you choose to hold it till maturity, which may not be the best option in most cases. Remember, structured warrants have an average maturity of 11 months from issuance. Structured warrants should be treated and viewed as a trading tool and not for long-term investment holding. It is always important to look back and remember at your own investment horizon or goal before you decide in holding the structured warrants until expiry. Now, we've already covered the 3 main parts in order to understand structured warrants better. So let's quickly recap what the 3 main parts are before we embark on our path to trading structured warrants. So number 1, we covered the type of structured warrants available in the market and what are structured warrants. Number 2, key terms to understand structured warrants. And lastly, the concept of time value and time decay. And since we've explored that structured warrants are a trading tool, how do we embark in our path to trading structured warrants? To begin, it comes with ideation, right? You would have to form a trading idea for your next up and coming trade. Your ideas may come from research reports, news flow, or better yet, from our very own Telegram channel, Trade with Maybank, where the team will post trading ideas daily with the hashtag daily highlights as well as Warrants Watch. The team behind this curates it specifically for trading ideas underpinned by data, market interest, news, and reports for you to capitalize on the trading opportunity. Now, once the idea is set, however, any ideas without actions are worthless. So in order to take action, we would have to determine the direction that we want to take with that idea. In this case, either bullish or bearish. Remember, if you're bullish, you want to look at call warrants, but if you're bearish, you will want to search for put warrants. And for your information, we have a Top Glove HH put warrant that is due to expire on the 29th July, this Friday, this week, and the last trading day is today. So since issuance, the performance of Top Glove HH has gained 250%, whereas Top Glove share performance has shed 74%. And also, Maybank IB is the largest single stock put warrants issuer in the market right now. And if you don't see the call or put warrants that you're looking for on Maybank Warrants website, you can always suggest it to us via Structure Your Warrants under the Warrant Tools tab. If the underlying share is eligible and has garnered enough interest, the team will push it for it to be issued in the near future. So let's say you have taken a bullish direction. So what's next? So the next step is actually selection. So the next step in this case is to select a call warrant for your trade. Recalling from the earlier slide where I spoke about the key terminologies to understand. So the three key terminologies that are used widely in the selection of warrants are its sensitivity, effective gearing, as well as premium. It is important to note that you will want a warrant that is firstly sensitive to the movement of the underlying. Secondly, has ample enough of effective gearing to enjoy the leverage effect of the call warrant, as warrants with high effective gearing will move at a larger percentage in relation to a 1% movement in the underlying. And lastly, premium or break-even price, because it is important to note that the larger percentage of the premium of the warrant, this means the higher the break-even price is. And if a call warrant has a high premium, it takes the underlying share to move up even more, and that's only for you to break even. Okay? And now, once you've bought your first call warrant, what do you do next? You would have to observe and monitor the call warrant closely, and not to just leave your position open and left unattended. Some may feel that all it takes is for the underlying share to shoot up dramatically and the warrants that they are holding would double or even triple the returns. But you should never have that thought when it comes to trading structured warrants. The reason being is because of, like I've mentioned and emphasized, time value. Because over time, if you've left your call warrant in your account without observing it, even though the share price has moved up slightly, you may realize some losses due to time decay. Therefore, it is always good to have it at the back of your head that structured warrants are meant to be a financial instrument and a tool for you to have the advantage of leverage and lower capital outlay. So therefore, trade it, don't hold it. Okay? And lastly, once you've got these steps laid out in the right path, then it will be time for you to accumulate. So what do you accumulate, you might ask? So this is actually accumulating profits in your path of trading structured warrants. It is important to remember that as a trader, you do not risk what you can't afford to lose and only place capital at risk that you're comfortable with. And also, always have a target price to exit and be comfortable of incremental gains along the trading path. That is why I said accumulate and not windfall profits. Do not chase for exorbitant gains, and it will not bode well for your path in trading structured warrants. So to quickly recap, the path where you should embark in trading structured warrants is ideation, direction, selection, observation, and accumulation. Okay, I hope that is clear for everyone. And if there are any Q&A, if you have any questions, you may shoot your questions in the chat or through Q&A.
Thanks a lot, Tucker. I'm sure everyone has learned more or less a lot of things here to digest in today's session, even though it's a beginner session, but it was a very, very fruitful sharing as mentioned by Tucker just now. There is two different warrants that we can look at. You have a call warrant and a put warrant, where he did mention that, he remembers call warrant as call to buy and put warrant as put to sell, right? So, so if anybody has any questions about warrants, also he mentioned about the six reasons why people do trade warrants, leverage with no margin call, lower capital. For example, as mentioned earlier on, if you're looking at the technology stocks and you like to look at warrants that over these technology stocks, you may take a look at some of the warrants where probably Tucker can go through the interesting warrants to look at, for example, UWC or Franken and whatnot. And also he mentioned about the time decay, which is very important to look at, as I believe is you don't trade, you basically trade the warrants, you don't buy to hold for a long term, and do take profit as and when. And of course, as he mentioned, our website as well with the live matrix. So yeah, just drop any Q&A. We are more than open to answer any Q&A. We are pretty much very friendly here. So feel free to drop your burning questions. Yeah. So there's two Q&A here. Tucker, do you want to answer the Q&A? Maybe we could start with
the difference.
Yeah.
So to answer that question, the difference between options and structured warrants is that you see the options that are being traded in the US market, for example. So those are actually American style options where the options can be exercised at any point of time until expiry. But for structured warrants, it's only it's European style and it's only exercisable at maturity. However, in this case, where options are exercised, you actually get the share. You get the delivery of share, or if you're assigned, you would have to buy the shares or sell the shares. But in the case of structured warrants, it is European style and it is cash settled. So that is the key difference between options and structured warrants. So the fundamentals behind options and structured warrants are still the same. They are still embedded with the Greeks, if you know your delta, gamma, theta, vega, and rho. So it's both common between the options and structured warrants. Okay, I hope that answers your questions. And I think the second one is, could you explain the delta use? Okay, I'll take this as well. So the usage of delta is the percentage of delta essentially shows you the probability of the structured warrant if it's a call warrant to expire in the money. So for example, if it's a call warrant that is at the money, it would have a delta of 50%. And what it also means is that the delta is basically, it measures the rate of change in the price of the structured warrant for every 1 ringgit change in the underlying. But in this case, because the structured warrants in Malaysia has exercise ratio, and exercise ratio is fixed, so the delta does not move exactly to, for every 1 ringgit change at a 50% delta, it doesn't mean the structured warrant would move 50 cents because of exercise ratio. So the usage of delta in this sense is meant more for effective gearing, because effective gearing takes into account gearing multiplied by delta. And also delta is also a good way to gauge the probability of the warrant expiring in the money if it's a call warrant, so it's 100%. And if it's a put warrant, it will be negative 100%. Okay. I hope that answers your question about the usage of delta.
Yeah, I think that is a really good explanation by Tucker. Hopefully, you get a gist of what the delta is. And just to recap from what Tucker did mention, that delta is commonly used in the calculation of effective gearing, where he did mention that effective gearing is basically how much in terms of percentage that your warrant moves when you're underlying. So an effective gearing with 3 times basically just means that if your underlying share moves about 1%, then your warrant is said to move about 3%. So these are all the common terminologies that you see in the structured warrants. And also where delta is also, in a way, you can look at the probability of it expiring the money. But because it's a traded kind of instrument, usually people do look at the matrix, as mentioned also earlier on in the session, where Tucker shared that sensitivity you can base on the matrix to see how it actually moves, how your warrants move in tandem to how your underlying share move. So these are the few things that to take a look at in a structured warrants, where I'm just recapping from what Tucker shared earlier on in the session. So yeah, is there any more Q&A that we will be here? So feel free to drop your questions. If you have no questions, maybe I can actually ask Tucker questions to get the ball rolling. And if people are like shy, don't feel free to actually drop us, contact us on our website. If you would like your questions to be answered and you don't want it to be answered here, you can always drop us an email where you can go to our website and just click contact us. Yeah, so maybe I can probably burn some burning questions to Tucker, right? So Tucker, maybe you can just brief us through again a recap of like what are the 6 reasons why people should actually start their journey into structured warrants, given that the market now is probably very volatile and people are probably afraid to try out structured warrants. Yeah.
So I think like out of the 6 reasons to trade structured warrants, I would like to just highlight a few that I find are the key reasons to trade structured warrants. Number 1, lower capital outlay, a leveraged financial instruments, share replacement strategy, and you can profit from either direction. So say for example, you are just started out in your career and you want to dabble into the markets and you don't know where to begin. And for example, if you want to purchase Malaysia Pacific Industry shares, which is priced at 30 ringgit, 40 ringgit, double digit, and for you to purchase a single lot would run you about 3,000 to 4,000. So in this case, if you were to have a bullish view over MPI, you can actually consider structured warrants, and you can buy, just one lot of structured warrants over the MPI underlying share. And it's only, probably 8 cents or 10 cents. And that would only run you way much lesser than the 3,000 to 4,000 that you would actually have to put out upfront when you purchase the share. So in that case, for example, if you are very bullish on the semicon industry in the next coming few months before 2022 ends, because you've read that Semiconductor Industry Association reported that May sales, global semicon sales in May were up year over year, despite recession fears or inflation fears or even supply chain disruptions. And another part of it is that, for example, Top Glove, like I've mentioned earlier, Top Glove was the darling of the market back in 2020 during the peak of pandemic, but things turn south for Top Glove because Pfizer, Moderna, they have found a vaccine for the virus. So since then, the share price has been on a downtrend. So in that case, for example, you have bought Top Glove shares, right? And you feel that, with the vaccine, economy will start to get back on its feet, and things will be normalizing and glove usage won't be that high. And you can consider a put warrant for you to, number 1, hedge your position on your shares, or you can just buy the put warrant to capitalize on the downside price movement of Top Glove. So I've mentioned earlier, Top Glove HH actually performed really well since its issuance until the price yesterday, where it actually gained 250%, whereas Top Glove share has actually shed 74% since the listing of the Top Glove put warrant.
Yeah, I think that's a very good sharing, explaining how the Top Glove works and the reason why people do trade structured warrants. And if you like to have any more ideas on where should we look at, where should I look at in the market right now, as mentioned by Tucker, we always have a Telegram channel that we have daily highlights on things that you might want to look out, like for example the top glove, whether you missed out on it, there's other top gloves that you may take a look. There's a call or put where you can benefit from both the bearish market or the bullish market, or also look it as a hedging strategy to your shares. Yep, so I think there is probably no more questions at the moment, but as I mentioned in the chat box, you can always drop your questions as and when, and we'll be happy to take it from there. Without further ado, probably I'll get Tucker to do anything. Want to share anything else? Tucker, do you like to share to the audience?
Yeah, I think just before we wrap up, I think you can see our slide is that Maybank actually launched its Warrants website earlier this year, and we recently launched our Telegram channel. So just for your reference or for your ease, you may quickly scan the QR code and it will lead you to the Warrants website, and you will see a rotating banner, and you can just click to the right and you would see the banner that actually leads you to the Telegram channel if you click on it. And if you reach our website, you can actually see that on the website, you can customize the widgets. There's 6 widgets that you can customize, and you can manage it as accordingly to your preference and what you require to see at a glance. So the website is highly customizable. There's even a feedback box for you to drop us any sort of message, compliment, request, complaint, feedback. And if anything, you can always go to contact us, and there is a phone number where you can contact us, and there's also our email address. Okay, I guess that's all.
Yeah. Okay. Thanks a lot, everyone. And don't forget to scan the QR code. And Tucker also mentioned, feel free to drop us a compliment, especially if you think that Tucker looks good today, you think the session is good, you like more sharing session like this, feel free to just drop us a compliment. We don't bite. We're very friendly people. So without further ado, thanks everyone for your afternoon lunch, whether you're eating here and watching this or driving to your lunch place. I hope you have a good day, and yeah, and happy trading, everyone. Thank you. See you next time. Bye.
Thanks, everyone.